All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. No new signals on the challenge here this morning. We have two crossovers, one to the upside with Walmart here this morning, but on earnings and massive move, more than two ATRs, so wouldn't qualify as a signal anyways. And then Chipotle Mexican Grill CMG. This is one of those rare circumstances where the 3 and the 7 are crossing down with the stock going up. We don't see this very often, but we have seen it from time to time, and we see that happening on Chipotle. It doesn't qualify as a bearish trigger, here with the consolidation risk, but that's those are really the only major crossovers that we have going on this morning. As I kind of look at the market and what's going on, and I know I got into a signal on what was that on Tuesday, got knocked out yesterday. As the market absolutely got clobbered yesterday, and then it ends at its lows, and then it bounces a little bit this morning. It's one of those where we have seen in the last 24 hours more action in the market than we see some months, right? It has been a very, very big 24 hours for the market. Now, what do I mean by that? Well, let's come and take a look. I'm going to go from 8 o'clock my time to 8 o'clock, this morning. So that's a 24-hour period. And this is the market chart. And if we take into account the range that is on here, we can see 2880 is about the high here, and then 2817 down here below, right? So we've got about 3.5-4% range, somewhere in that area. In the last 24, this is 24 hours, right? In the last 24 hours, we have seen a sell-off to the magnitude here of 25 points, so 1%, right? Think about most market periods, right? If you see the market down 25 points, oh my goodness, what happened? What's the news? What's going on, right? This happened in less than an hour. And then it saw a 10-point bounce. And then we saw what? We saw another 25-point drop, happen in the next hour. And then in 30 minutes, we see a bounce here that, from a magnitude standpoint, is 20 points, right? You look and you go, oh, market's up 20 points today. That must be a big deal, right? I mean, something had to have happened. Some sort of news had to come out for the market to be up 20 points, right? And then 30 minutes later, the market's down those 20 points. Oh, and then it rebounds those 20 points again, only to give them up 5 minutes later. You kind of see what's happening here, right? Then we get a kind of a lull, a quiet period near the lows, and the market just starts, marching back. Look, it's not nearly as volatile, not nearly as temperamental, just kind of marching on back. We see this rally here from 28.35 up to 28.55. So nice little 21 point rally here in the market. Things are stabilizing, right? Okay, we get a 15 point or a 10 point dip. All right. Market recovers that. Nice job. Goes now, going to break into some new highs. Overall, nice little 20 point rally. And then look at some of these sells. 28.65 down to 28.50. It's a 15-point sell in 7 minutes? Then it recovers the whole thing an hour later, only to drop then almost 50 points in an hour and a half. In 90 minutes, almost 50 points. You think about that, if that were a single day, everyone would be, whoa, what's going on? What's the news? What's happening? And there was news right here, right? We saw China commenting on the trade war. And then, okay, we climb on back. We retrace that sell. Okay, pretty normal, but, that's a 20-point rally, right? And then in 1 minute, we get a 30-point jump. And then it sells off 15 points, only to jump back up to a new high. You kind of get what's going on here. mean, this is the type of action that if it were a daily chart, we'd be going, whoa, there's a ton going on here. This is kind of crazy. This is kind of choppy and all over the place. What's going on? Right? That's if these candles were, that's if each and every hour here were a daily chart. And I could kind of give you what that would look like, right? If we just come in here to a 1 hour and let's come back to the last 24 hours, maybe. There we go. Yesterday morning at 8. Here we go. This is what the daily chart would look like. Okay. Let's get rid of these drawing here. There we go. But this is what the daily would look like. We see some months looking like this, right? I mean, come on. Look at this big bad candle. Market's got to go up after that, right? No. Right. Now here we have a nice little reversal, downside, upside reversal. But you kind of see what this, what this kind of looks like. And this is just the past 24 hours. Just the past 24 hours. If we come in and add another period of time, we add Wednesday, we add Wednesday morning, right? Pre-market, during the European session. Now things look even more choppy, more volatile. I mean, look at this big up candle. Market's got to go up after that, right? And that's just what the market is right now and what we are dealing with in the market at the moment. And, there are no signs that that's going away, right? We don't have any signs that is, nature is ending here, okay? Bear with me for 2 seconds. I will be right back. Okay, my apologies. I am getting a note here that some are having some buffer issues with the video stream. My apologies. I'm getting a note also that there's nothing we can do about that on my end. It is a streaming end, so I'll wrap this video up, get it posted, and you'll be able to access it here. But you can kind of see what's going on, right? A lot of chop, a lot of movement. And not all of it has any sort of news associated with it, right? It is one where option values are extremely elevated compared to, normalized market conditions. And, a period where we are still seeing that chop. And, this is something that, August is known for. It is something where if you're looking at the next news event to say, hey, what's going to catalyze the market out of this, you're probably not looking in the right spot, right? Because what the market needs to really make a massive change is something out of left field, something new for it, something new to react to, right? It had something new to react to yesterday. We talked about it in depth, and that's what the market's going to need. It's going to need something new. It's going to need something different, and until then, we will see some of this chop remain. We're going to have multiple 20-point rallies and 20-point sell-offs today. That's what the S&P futures, overnight indicate that we will see. So I expect, the chop to be pretty darn heavy here today. Now, I got a question talking about two gold mining stocks, and so I want to go out and take a look at that here. But the two mining stocks, Newmont, NEM, and the other one is KL. And you know where I stand on gold. I talked about it, yesterday as well. But Newmont Mining, very interesting company. Is kind of the combination of two companies, Newmont and Goldcorp, that recently merged. And we've seen a lot of merger activity within the mining sector. And then another one, and then I'm not very familiar with KL. I know of it. I've never traded this stock. I've never analyzed it to any great degree. But the question came in, do they move in the same way, or do they act differently? in the metal space. Well, let's go figure it out. We can do a couple of things to kind of answer this question of, do they move similarly? Are they kind of the same trade, right? Coke and Pepsi, they tend to move similarly. AT&T, Verizon, yeah, sometimes they'll do a little bit different, but here, if we come into Newmont, it's a gold stock, basic materials. We come down, just kind of read what they do. They operate the mining industry, develop, explore, and produce gold, copper, and silver. Okay, great. Pretty straightforward. Not exactly a complicated business model. Kirkland, they exchange in the acquisition, exploration, development, and operation of gold properties. It owns and operates 4 underground gold mines, including blah, blah, blah. Great. The company was formerly known as Newmarket Gold Inc. It changed its name to Kirkland in December 2016. There we go. So we have 2 companies. They basically do the same thing, right? They're both gold. They're both mining for gold, right? So they're likely going to move together here with them. Now, there's a few things we can do just from a pure metric standpoint to kind of look and test this, right? One of my favorite ways is to come down to indicators and just put on performance, right? Just price performance. We could come in and we'll just put the two tickers in here. So I'll put KL:NEM, right? Very simple, KL:NEM. What this is going to do is it's going to look at how Kirkland performs relative to Newmont, or how it has performed relative to Newmont, right? And you're going to see Kirkland has outperformed Newmont in a big way, right? We see Kirkland here is September. It was 18, and now it's 45. And we look at Newmont, and we see Newmont was 28, and now it's 38. So what's that tell us? Well, that tells us that both have kind of gone, in a similar direction, but Kirkland has outperformed Newmont in a huge way. I mean, not in a small 10, 20, 30% way, 120 freaking percent. That's a huge outperformance, right? And that would lead me to dig deeper into Kirkland to understand why, right? To simply understand what's going on there, especially if I'm, looking to buy one or the other here within that space. We can also put another indicator in here called correlation. A correlation will come in and we'll just say, okay, let's take a look at at how Newmont is correlated with KL. All right, so we have correlation, Newmont, KL. And are they positively or negatively correlated? Well, if they're up here in the 0.75 to 1 area, it means they're positively correlated. That when Newmont goes up, Kirkland goes up. When they're down here in the -1 to minus 0.75, it's basically when Kirkland goes up, Newmont goes down. They kind of move opposite directions. This overall is a pretty positive correlation, meaning they tend to move in the same direction, which is what we would expect. But man, it's not very strong. I mean, we get periods where they actually become negatively correlated, and these periods look like they're happening quite often. So let's come in here to a weekly chart, and you kind of see since Kirkland IPO, you can see that it's pretty darn positively correlated. They move in the same direction. There was a period last summer where that we did see, some opposite direction. And a lot of times when there's kind of one instance like that, it's probably one company had earnings and got dinged or something of that nature. For Newmont, the whole Goldcorp acquisition, led to them getting dinged a little bit. But, these are 2 stocks. They tend to do what? They tend to move in the same direction, but the magnitude of change on Kirkland is significantly greater than Newmont. in a huge degree. It's not just a small degree; it's an absolutely monster degree. And so, if you look at this and you say, okay, you know what, and I'd want to go take a look at some of the fundamentals and kind of see where things are and everything else. But it's one where you go, okay, if I want to be a little less aggressive in the gold space, I'll buy some Newmont. If I want to be more aggressive, I probably should buy some KL and run with that. Okay, just a quick look at the fundamentals. I'd rather own KL than Newmont, but I'd rather own a lot of gold stocks rather than Newmont. Newmont's not terrible, but I do think they're just a lot better out there. GOLD. I think even the real spec ones like Harmony, HMY, and AUY, Yamana, I think are significantly better value, better risk reward scenarios than Newmont Mining. A lot of times when you see a commodity stock, one commodity stock outperforming another commodity stock in a monster degree, like we see with Kirkland versus Newmont, a lot of times it has to do with hedging, right? Commodity companies will go out and they'll go into the futures market. And what can they do? They can sell their future production of gold for, the pricing that futures are, and then they have to deliver the gold at that, at that price. So they can basically lock in their price for a long period of time. Companies that do that, they're better hedged for if the prices tank, right? And they're going to hold up better. Companies that don't have those same hedges, when the commodity goes up, they're going to profit a lot more because, a company that has the hedges, right, even if the price of the commodity goes up, they can't sell it for more. They have to sell it for what they agreed to on the futures market. Where a company that doesn't have those hedges can come in and say, hey, you know what, we can now sell our product for higher. And so a lot of times a discrepancy, and I'm not sure if that's the case for Kirkland or Newmont, but a lot of times when you see such a big change in or magnitude of performance differential here, a lot of times that has to do with hedging when it comes to commodity names out there. Okay, so hopefully that helps kind of understand a little bit more about how you can look at those and run forward here with those. Okay. All right, so challenge remains in all cash, I will absolutely jump in aggressively on the next signals, as they come in. I don't know when that will be. I sure hope it's this afternoon and sooner than later. But when it happens, we'll be there, and we'll look to capitalize on that and make a nice kind of last month push here for the challenge. I've been asked a few times when the next challenge starts. This challenge will end on the 20th of September. We have not announced a start date for the next challenge. We have not decided on a start date for the next challenge. Most likely, it will be end of September. Maybe beginning of October. We will take a look at that. But I may do a little bit of a 2-week live trading, day trade type of thing here in that 2 weeks, but not completely sure on that. But we'll have a date announced here in the next couple weeks. Okay. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.